Good afternoon and hello and welcome to Middle Class Investor. This is Seth Martin, your host. We had a down week in the market, as you can see right here. And, the market is flirting with resistance here. And, I think there's a couple of different options, but I don't think it really matters which one it is unless you're a very short-term trader. So let's just look at those options real quick, and then look at some of the other markets. So we've got this kind of expanding triangle potentially. I mean, I'm not saying this is for sure what it is, but it looks like one. And so what I'm expecting to happen is for the market to make its way down to here and then rally into a final fifth wave. Of course, it's possible that the market finds its way up here to complete this move and then works its way down. So there's not really any difference between those two unless you're a very short-term trader. You can capture some gains here over the next several weeks. But either way, if you're a 401k investor, I mean, it's likely a matter of time before we at least get back down here to resistance. Now, I mean, the other possibility is the market has topped here, but I don't know. It's very ugly looking ABC, and it's really hard to see, completed five waves here. So I would say that's less likely, but it's possible. So I guess what I'm looking for is I'm just not looking to be long here at all. Again, it's possible that the market kind of chops its way up here and then starts to roll down, into this area. It's possible it goes here first, but I don't think it really matters. That's kind of my position on it. I think some of the more interesting markets right now, we're starting to see some bust out of the 13-week Treasury. If I can get that pulled up. And I think that's important. We spoke last week, I believe, about that really nothing was going to happen until we broke out of this range. Well, we're starting to break out of this range, which I think I don't think it means the Fed's going to lower rates, but what it could mean. Let me get it over there. If we go look at the 10-year Treasury, it could mean that the 10-year Treasury is going to head a little bit lower. We talked about that before, about the possibility of it coming down into this area. There's a lot of support in this area. In fact, let's look at that. You can see this big congestion area right here. This is pretty good support, and then this is the start of this up move. So a lot of times what happens is once you break through the fourth wave low, which is somewhere in here, this is kind of the fourth wave support area. We clearly broke through it. We broke through it, retested it, broke through it again. So that could mean that the 10 years coming all the way down here to sub 2. So didn't think we'd see that again, but that's really a pretty strong area of support. It's after this congestion area. So you might see a little rally, and then a final move down into the sub 2 area. The yields in the treasuries, it's been hard to identify that wave 2 area. I mean, it could have been here. I thought there was a good chance it was probably here. Then the next area is like right where it is right now. But since it's kind of broken this fourth wave low, I think the odds are that it goes all the way back down here to the sub 2 area. And then that, hopefully, I mean, I say hopefully only in the sense of that this is our forecast. This is a wave 1 off an important low. In fact, let's just look at that real quick. You can see here we had a low here, but then a rally and then a new low. So this is an important low. This is like a 35 or 40-year low, something like that. And then we had this first move off the low. And so what we're looking for is, some sort of pullback off of that high that was made. So that's why I say it's pretty critical to the forecast that this low hold. If it makes another low, if it makes a new low, well then we're starting all over again. I mean, we got to reset the forecast. Okay. All right. Let's look at volatility. Volatility has been low, even though we've kind of been selling off and drifting lower. Not much volatility in the market. I mean, we saw a spike here, but then it pretty much came back down. So, and it was down here for quite a while. So it'd be interesting to see if volatility kind of finds an area here and then starts to rally, or does it just kind of continue to drift lower into this range that we've had for a while, that's below 12, right around 12, 11 on the volatility index. So I'll be interested to see that as well. Okay, as far as the Germany and Japan and UK, not much has changed. We potentially have a breakout of the channel, retest the channel, and maybe a move higher. They pretty much all look like this, depending on how you draw the channel. This one kind of broke out of the midpoint of the channel. Looks like it's retesting the midpoint. And then the UK, same thing, broke out of the midpoint of the channel. Looks like it retested the midpoint. It'll be just interesting to see if these roll over and go lower, or do these kind of find support here and rally up. It's hard to see 5 waves here, so that's why I like these support and resistance areas, is because even though I can't really count the waves here, I know that this was an important swing high back here, and so I know that this is likely resistance. And sure enough, look what it did. It traded right up into that area and then rolled over. So that's probably the best way to look at these. I mean, if you're long, if you think the UK should, Brexit, whatever's happening there, and it looks like the market might go up, then you want to kind of have a resistance area above this swing high. Well, I would say it's at least going to slow down a little bit on this swing high, but this swing high right here is probably more important. If you think the market, if you think UK it should be long, okay, so this one right here. Now, if you think the UK is going to sell off, then clearly this swing low right here is an important swing low. So you want to have that on the chart. And I think these, if you can identify these swing highs and lows, the important ones, and the easiest way to do it is just go up. So right now we're on a weekly chart. So if you went to, a monthly, so 5 times greater as an example. Now we're on a monthly. You can see this swing jumps out real heavily. And of course, this swing jumps out real heavily right here. Let me make sure you see that. See how this swing right here is very pronounced? That it's very easy to see that right there, that high, and then this run to the high, and this. So the important resistance area, is this one. Is this one right here? Even though I drew this one too, I said this one's more short term. Longer term one's there, and the other long term one, is right here. Right? It's this one right here. So again, if you think the UK is going to be, you should go short the UK, then you want to kind of pick this as your target area and set your trade up accordingly. If you think the UK is going to be long, then you want to set the trade up, and this is your target area. Okay, we're right smack in the middle of that, so that's one of the reasons it's hard to tell. You either need to wait for it to go up here and then go short, or wait for it to come down here and go long. You don't really want to trade right here in the middle. That's always the case. You don't ever want to do that. It's kind of like being in the middle of the road. What do they say about staying in the middle of the road? You're likely to get run over. So it's the same way in trading. So, all right, let's go over to the toss charts real quick, and get the legend up so I can see what I'm doing. I cannot figure out how to fix this so that I can get my instruments come up when I click on it. It's very annoying. Let's see, EUR, Euro US dollar. So the Euro US dollar, this is one I'm watching very carefully. It's likely that we've put in a low, or we could make one slightly lower low. If you look at it on a 4-hour chart, you can kind of see, or at least what I see is I see kind of an ABC 1, 2, 3, 4, 5 potentially. And if that's the case, then we should be moving out of this triangle here. Let me draw it. So it's kind of a like an ending diagonal type triangle. You see, we might make one more low. This might be an ABC down. So could make one more low, but it looks like potentially an ending diagonal type system. And if it is, then we're going to have some pretty explosive euro pricing to the upside soon. Maybe as early as next week. It just depends on how. Whoops. Trying to draw this line right where can't get on the right line. I drew these lines too close together. Oh, there we go. So you can kind of see, one, or maybe one here, 2, 3, 4, 5, or ABC 5. Another down sequence here. So either way, you're pretty good entry reward to risk. Let's just look at it for a second. Let's just say, let's just say you entered here and your stop was, well, I think since you're at the top of this, you wait to see if it rolls over. And if it rolls over, then I say wait till it comes down to the next line and then look for your entry. But your reward to risk is very, very low here because you can, no matter where you enter here, your risk is like here, but your reward is like way up here somewhere. So it's pretty good on the Euro US dollar. All right. Let's look at oil. I think oil's begun to roll over. And we talked about it last week, but we had a really sharp, let me get back on a weekly. We'll use that one. We had a really sharp down week this week, as you can see, and that could be, so sometimes, let me cover something here. This is what makes trading difficult, but when you have a correction, an A, B, C, okay? The C is very violent. It's very sharp. It doesn't chop a lot. It's really sharp. So you might get some, A sometimes is very sharp, but you definitely get a lot of chop in B. And then usually C is very sharp. In fact, you kind of look for the flush. That's how you know you're in a C and you want to go ahead and maybe take a, because fives, when you're in a 5 and it ends, it doesn't end so much in a flush. So you can kind of see right here, I mean, this looks like a flush, right? But this could be an A. And then, so an A, B, and we're looking for C. That's kind of what we forecasted here, because we've got a triangle that we're looking at. But anytime you're in the heat of the moment and you're trying to figure out where to take your entry, wait for that kind of flush. Now the MACD is starting to roll over. We've already said before that we think this is going to be some sort of A, B, C down into this area. So probably not the best place to go long oil. Again, it's in the middle. Middle's not a great place to. The middle of some sort of pattern that you can see is not a great place to take a trade. So I think oil will probably accelerate down here over the next, 6 or 8 weeks. And then, look for entries here either in the crude light itself or in oil stocks if you like those oil stocks. But I think right here, oil is finished going up. So it's probably not going to go up to this area. And it's more likely we've got some sort of ABC. The ABCs, these choppy corrections are very, very common inside consolidation patterns, which is what a triangle is. So, if this is 1, 2, 3, and 4 is going to be this long consolidation pattern, then 5 down is going to be kind of a last minute blast into this 21.20 area, $20, $21 area. So this could very well be a consolidation pattern, and it's starting to look that way, right? This could be an A, B, C, and this looks like this might be an A, B, C. So, this would be A, this would be B, and then there'd be C and D and E, and then one more flush down. So I think oil for this little run up here is probably done, and it's probably going to make its way down here into the $35, $38 area. So, if you have to buy a lot of gas for your business or something like that, that's good. If you own an oil company, it's probably not as good. So, but it's just not good temporarily. All right, let's look at gold. Gold also is in some sort of consolidation pattern, although I think it's more like an A, consolidate, C. So like A, B is the consolidation, and then C up into this area. And, what we've got here is we've got a little pullback. We've had this on the chart for a long time, and we almost hit it. And, depending on how conservative you are, you might want to wait and see if this pulls down a little lower. Or you want to, if you do get a candle on this weekly chart, and it looks like, it's a close next week. In other words, if we come in next week and we have a candle like that, probably you should be in gold and looking to trade it up to that 1450 area. So, or buy physical gold. You could also buy physical gold and silver here. Now, silver, I think it kind of wants to go a little lower, which is kind of weird. Usually these kind of go together, but it almost looks like silver wants to go below this low. And I don't know. I mean, I own some silver and I'm underwater on it. I mean, I own physical silver, and I want to say I bought it at about 15. Of course, I bought it a long time ago. I bought it, I don't know, when we were coming off of this area right here, maybe I thought this was the low and we were coming off somewhere in here, maybe here. Maybe I thought this was the low and we were coming off the low, and I bought it around 15, and then it came up and made a lower low. So, as long as you're in the area, I mean, obviously it would have been better to buy silver here. I think ultimately the best place that's going to be to buy silver is off this pivot low right here, which is below $8.30. So ultimately silver, it's in some sort of correction. We had this huge bull market, this huge run up, and we're going to see some sort of A, B, C correction, and then the next run up is going to be huge. It's going to last for decades probably, and it's going to be huge. But I think that buy is going to be closer down here below 8. And so we're pretty close to that now. So, I mean, I think I've talked about this before as well. I mean, you can wait to buy silver at 8, but who knows? I mean, who knows what the deal is? I mean, maybe the government's outlawed it at that point. I mean, I don't know. Or, maybe the commissions are much higher. Maybe it's more scarce. It's harder to find it. I just don't know. So, there's no way to know. That's why, when you're going to buy, anytime you're buying something scarce, you have to make a judgment about, what the price is and is there a better price. So, especially if you're buying the physical, I think you could trade, you can trade silver down to 8 and then buy a truckload of it at 8, but your silver that you own is in dollars, and therein lies potentially the problem. So anyway, just something to think about. The thing I like about silver is, one coin doesn't cost so much. So like in gold, if you buy like a 1 ounce coin, it's $1,000 or $1,500 or something. So if you had to use it to actually buy something, how are you going to get change? That's kind of the way I think about it. Whereas if you had silver, you could scrounge up $20, $30 worth of goods and then give somebody a single silver coin or something. So that's why I kind of like the silver. But it's your money. You do what you want. Do what you think's right. That's what I always tell people on here. And I guess there's nothing more to say about that. I don't know what else to look at right now. I think I'm looking at the things that are probably the most important things to keep your eye on. But again, let's finish up by going back to the whole 401k thing and what you're trying to do there. And let's go back to a 5-year weekly. And just if you're still in your 401k, then hopefully maybe it'll drive its way up into this area, and then you can step to the sidelines, because from here down to here is 20% or more. Let's measure it. It's not the kind of loss you're going to want to see in your 401k. What is that? That is 25%. So that's a big enough number in your 401k that you're not going to want to see that. So I think if you're still in, I think that's not a bad place to be, because I think the odds are that this comes back up and gets in. If you notice, we didn't really get into this resistance area. So let's go back to I think this is important to bring up. So I'm gonna back up here a little bit. Let's go back to a 10-year, and let's look at the pivots. Let's make them really clear on the screen. So here's a pivot, right? Here's another pivot on the high side. And then we're looking for a pivot here. So I think the odds are pretty good that next week and the week after we kind of grind our way back up here to this resistance area. And then, make our way down. So to me, if you're still in your 401k, it's a little bit risky, but it's not overtly risky, I don't think, because I think the odds are that this probably does meander its way back up here over the next couple of weeks. Maybe you get some sort of spike high right here, where you get a candle not like that one, but let's say you get a candle that's the body's here, and just on some sort of crazy news enthusiasm, you get a little spike up and then it rolls back over. That day, and it's hard to do. Let me just tell you right now, when we get a spike high here and there's a lot of good news and all this kind of stuff, it's going to be hard for you to go into your 401k and go, let's just put all this to money market. You're gonna go, well, I don't know, what if he's wrong? And look, it could be wrong. Okay, could be wrong. But if the beginning of the week is very bullish and the end of the week is kind of bearish looking, trust me, you're going to want to get out of your 401k, because then we're probably into the start of this move here. And minus 25% is not an insignificant amount to lose in your 401k. Okay, so again, we haven't really gotten, and let me clarify one other thing. These boxes that I draw in here, completely arbitrary. So this yellow box that I've drawn on here, what I do is my eyes just kind of go just beyond the pivot and I make a box. And as you can see here, this didn't go to the box, but there's nothing magic about where I put the box. I mean, it's just a zone where my eyes typically see the market stop. But if you notice, it fell short. It did make a new high, but it fell short and started to roll over. So it's possible that it's made its high and then it's going to roll over. It's also possible you can kind of see a little pivot here. It's also possible this comes down a little lower, stops here, and then rallies up. So that's why I kind of like what I do is if I'm close to my target, I can just go ahead and take it. If it looks like my forecast, because I can always get back in. I can wait here. If it starts to look really bullish here, I can go ahead and get in and pick up 6, 8, 10%. But if I'm uncertain and I'm indecisive, the problem is that starts this conversation in your head, and you just can't. It's almost like you can't break out of it. So be very careful about that. All right, everybody. Listen, that's it for this week. Thanks for coming in. Thanks for watching the videos. Hopefully you're, copying a link and sending it to your friends and family. I'd like to expand the viewership as much as possible. I think it's important. Doesn't cost any money. It's free advice, and so you got to, what they say about free advice. It's probably not worth that much. So, but I think if you're indecisive and you're trying to figure out what to do, it is good to listen to some sort of analysis about what somebody sees on the chart and why they think certain things are likely to happen versus other things. Okay? All right, everybody. Thanks for coming in, and we'll talk to you next week. Bye-bye.